Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking energies and oil prices seeing a bit of a decline after quite a large move higher. So kind of a up and down couple of days for oil. We saw the pressure coming as rising stockpiles, rising supply, so to speak, in the face of OPEC's production cuts and versus the U.S. Rising production amid higher oil prices. So we're starting to see stockpiles go up a little bit, and not necessarily going to throw a wrench into what OPEC wants, but maybe just keeps the price right around 60 instead of seeing us maybe get to 70 sooner than we thought. But right now, it seems that with oil prices on the rise and getting stuffed here a little bit at the 62 level, you would think it would be a dollar trade. Dollar comes in, starting to bid a little bit, but it really hasn't been a factor. We've seen modest upticks in the dollar, this being one of them, but not really changing trade. We talk about the dollar moving up, U.S. dollar price commodities going down. That is true. However, this isn't one of those times, and I think the dollar right now is kind of on an island on its own. It's trading off Fed policy, off fiscal Washington, D.C., whether they can get their ducks in a row, and now it's trading off trade. And I think that the oil prices will move up and down based on the dollar, but won't be exaggerated like we're used to seeing in the past. And I think right now, if you look at trade, the trade war and the tariffs that we're seeing in the U.S., oil is affected by those on more of a global scale. If you look at global growth, it's on the rise. But if you talk about tariffing and you talk about, minimizing trade at any level, it's going to minimize global GDP growth, which I think is something that oil looks at very carefully and very closely. And so that could be a reason why we're seeing some selling. I'm not saying that's the reason why oil has come in and down $1.50 today, but it could be a reason why you start to see some selling, and maybe why we see a little bit of a top here. We see some growing concerns with supply, and now we're seeing some growing concerns with GDP, global GDP. Let's wait and get out of the woods on this one. I think that ultimately it'll blow past, but it may take some time. And likewise, anything that happens in the media that's going to continue to generate a buzz about this will continue to keep it more negative. And I think that right now, once we get past all that, we should start to see clarity. And oil prices, if we continue to see oil prices on the rise, if GDP continues to grow, $70 is well within range by year end. So right now we're seeing a bit of a pullback in oil, not yet saying it's a buy, but certainly could be a little bit of a standoff here between expectations for GDP growth versus oil prices versus supply. This is Todd Colvin coming to you from the floor of the CME Group.